Okay, well, hi and good morning, everybody. I want to welcome you to today's Payne's Education. This is the beginner intermediate class with me, Rob Weiler. Hope everybody's having a great Wednesday so far and a great week as well. Welcome, one and all. I've got a lot to talk about today, so let's go ahead and get started. As always, we've got a few disclosures to remind you about, so just bear with me as we let you know that anything we talk about today is just for educational and informational purposes only. These are not buy or sell recommendations. All investments involve risk, and past performance does not guarantee future results. Payne's Education and Charles Payne are not giving investment, tax, legal, or other professional advice. Payne's Education retains all titles, interest, and intellectual property rights of the material provided and contained herein. The terms payneseducation.com, Wall Street strategies, and other logos or trademarks cannot be used without express written permission. Charles Payne's experiences are not typical. His results are not a guarantee for your success. And lastly, Payne's Education is not endorsed by or affiliated with Fox Business. Making money with Charles Payne is the property of Fox News Network, LLC. All right, we've got a great group tuning in with us here today, about 80 people or so, and quite a few names I recognize, and maybe a few others I don't. And so, if you do happen to be new to the program, welcome. This topic today might be a little bit more advanced than for the beginner, more of an intermediate topic, since we've already kind of gone full circle. We've talked about all the three pillars of the approach to investing, going through fundamentals and then technicals. We've had a great discussion on price patterns, and last week we talked about, I think it was last week, we talked about entry and exit rules, and then we took a step further by going through, the mechanics of how to do a swing trade and entering into those bracket orders. And so now we're kind of broadening your horizons, and expanding your knowledge, where we now talk about, well, what do we do when markets don't go up? It's kind of tough topic to teach today, but because markets are still riling up higher, but that won't always be the case. You get a year like 2022 and the markets were falling down lower, then what do we do? Do we just sit there in our hands and do nothing? Well, no. What's great is that you will have the knowledge and capability to be able to trade really in any market environment. And so when things are being bearish, if you only know how to trade to the upside, you're shortchanging yourself. You're at a 50% uh, handicap, because markets don't always go straight up. And so when they start to pull back, then let's learn how we can trade to the downside. So that's what we'll do today. Is we'll discuss what you can do when things are being bearish, and that means that the overall market's being bearish. But if you have a bearish security, then we can learn to make money to the downside on that too. So we'll show you what this means to short a stock that you might hear about. In fact, on occasion, when the markets are being bearish, for those who subscribe to Charles's hotline service, you may even get an alert that says, hey, we're going to take a short position, which means that we're taking a bearish position. And it's not very often, but I remember in 2022, there was a few times where he did exactly that. And so it'd be good to know what to do in those types of circumstances. You certainly want to be aware of the risks that are involved with shorting a stock. And so we'll go over that today, so just so you're aware. And then we'll also just briefly cover upon some other bearish strategies that you might consider too. All right, so let's jump right in. In fact, I'm just curious, how many of you out there have shorted a stock before? Go ahead and chat in yes or no if you've ever shorted a stock, intentionally gone out. Some of you have done it unintentionally. I've seen some students do that, but okay, I'd say majority are probably saying no, and that's to be expected, honestly. It's not every day that I'll go out and do that. I have on occasion, haven't this year at all. But when there's an opportunity that arises for that, then why not? And so let's talk about that. What it actually means to go short a stock. So first of all, we have this language when we're trading, as investors and traders, kind of have our own lingo. And for someone who's new, I never want to assume that you already know this. And so let's just make sure we've got our bases covered here. You hear oftentimes where you'll talk about people that are going out and going long, or you might get an alert that says we're going long a stock or long an option. Remind me again, what does it mean to go long something? What is long synonymous with? Yeah, so it has nothing to do with time frame or distance or months or expiration or anything like that. It really means that we're taking on a position, we're buying something. So we're so used to going long stocks when we're investing that, in this example, let's say we're going to go ahead and buy a stock at a low at $50, right? We're always told it's good to buy low and sell high. So let's say we buy, and specifically we go long to open the position, right? We're buying it to open up that position, meaning that we own those shares. Okay, so we bought low at 50, and then hopefully the stock rises higher to where later on maybe it goes up to 58 and we sell high. So of course, what's our profit in a trade like that if we bought at 50 and sold at 58? Easy math for the morning, right? Yeah, I made a whopping $8 per share, not bad percentage wise. And so that's what we normally do. Okay. Well, when that works great when the markets are being bullish like they are lately. But what happens when they're being bearish? Well, if things are at a high and rolling over, just falling down, 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 then we do everything backwards. That's all shorting is that if we go short something, that means that we sell to open a position. Okay. So we might sell at a high, and I guess I put a different number there, but 57. If we sell to open, so we're normally selling to close a position, but here we specify by saying that we're selling to open the position, meaning that we're taking on a short position. So we sell short is the terminology we would use for that, to open the position. So we sell at 57 with the idea that the stock is being bearish and falling down lower and lower. So eventually, let's say it comes down to 50, then we can buy it back. And specifically what we say is that we're buying back to close or buy back to cover the position, because we shorted it first with the idea that it'll fall down lower, so then we could buy it back at a lower price. So what's our profit on that type of trade? If we were to sell at 57, sell short, and then buy back to cover at $50, yeah, it's just the difference again, right? It's still a profit of $7. So that's really all shorting is that you're doing everything kind of upside down. We're selling first to create a position with the idea that we'll be able to buy it back at a much lower price because we believe that the stock is being much bearish. All right, well, how do we sell something, when we don't own the shares? Well, first of all, when we're shorting a stock, it's basically a strategy to profit from the downward move of a stock by selling shares first with the objective of buying back those shares at a lower price. So again, that leads up to our being a bear strategy. And so again, the question might arise, well, again, how do I sell a stock that we don't already own? Well, that's what shorting entails, is that we go out and we actually borrow it from another investor or through the broker. Okay. And so it does require that you have margin capabilities. So question, can I go out and sell short in my IRA account? Or maybe my Roth account? Yeah, the answer is flat out no, you cannot, because there is no margin in your IRA. You can't borrow in your IRA accounts, right? So this does require having specific margin trading capabilities. Now, when you opened up your account with your brokerage firm, they most likely asked you, do you want to have a cash account or a margin account? And to this day, even if you never trade on margin, never even short a stock, I still suggest that people get a margin account. And there's some reasons why. Whereas a cash account, you're just specifically using your cash and that's it. You have no other capability. But in a margin account, it does allow you to have other certain capabilities that you can choose to use. You don't have to, you can choose to use them. Okay, it's just nice to have that capability. But let's talk about that. What on earth is margin then? Well, margin trading just allows you to borrow either money to purchase marginable securities, as well as the capability of being able to sell short if you ever wanted to. So in other words, it provides leverage. It creates what's called buying power. Okay. Now to have that, you have to have at least $2,000 in cash or marginable securities. So you can't have or trade on margin if you only have 1,000. But if you have 2,000 at least or more, then you have that margin capability if you signed up for a marginable account. What that means in the terms of leverage and creating buying power is that with that 2,000, if I wanted to go out and buy $3,000 worth of stock, I can't do it, right? Because I only have $2,000 of cash to my name. But when you have margin, you could technically go out and borrow an additional 2,000 and buy up to $4,000 worth of securities. What you're doing is you're using 2,000 of your own cash and then borrowing the remaining $2,000 to be able to have that leverage to buy $4,000 worth of securities. Well, what's kind of nice about that is that certainly if the stock moves up, you can have an even larger percentage return on your trade because you're not using all of your money. Of course, you have to pay that back, but it is a double-edged sword because if things go down, theoretically, you could potentially lose more than what you have in the account, and that's bad. Now, when internet trading came out back in the late 1990s, people really went kind of crazy with margin. They didn't really understand it, I think. They got a little carried away. The markets were being very bullish. It was the whole hype of the dot-com era. In fact, the AI surge we're seeing now kind of reminds me a little bit of that. And so people that didn't know what they're doing, my goodness, they're really getting in over their heads. And at the time, I was a fairly new broker. And I remember after the crash in 2000, a lot of people got into trouble. They actually lost more money than what they had in their account. And to this day, I still remember this picture of this Asian couple coming in. and the wife was just crying because my boss had to put them on a payment plan to pay back the money they owed to the brokerage firm over a 2-year time period. I thought, how sad is that? They're just paying back money and they get nothing out of it, right? And after 2 years, they'd finally have their debt paid back to the brokerage firm. Well, that's because I got carried away. Well, because of that, then the firms, the governing bodies restricted a lot of things, and they developed a lot of safeguard rules and things like that to help hopefully prevent that type of situation from happening again. But I bet it still happens even to this day when people just don't know any better. All right, so you want to be aware that when you use margin, you typically must maintain at least 30% of your total value of your position as equity at all times, but it could vary from brokerage firm to firm, so you just want to check with your brokerage to see how that works out. Now, when I talk about creating buying power, if I jump into our Thinkorswim platform, let's bring it up here. Looks like the Dow's up again today. Kind of a tough day to teach trading to the downside, but nevertheless, let's go into our monitor account. And you may have noticed that when you're looking at your positions, over on the far right-hand side, you'll probably see this BP effect, which stands for buying power effect. So if I were to come down to all of my equities, my stocks, here are all these stock positions, you'll see that it creates a buying power. And you might notice that if I were to take what the value is of these securities, let's maybe find one that's got an easy math here. We could take something like this. You'll notice that the value or the net liquidity of this particular security is worth about $5,000. That's creating about half of that, which would be $2,500 of buying power. Okay, so these marginal securities creates buying power for you. Well, what happens then when I look down at the very bottom, in this account, I have cash in my account of $7,267. That's my cash. That's my money just sitting there liquid that I can take out in cash, or every night it's swept overnight into what we call a money market or sweep vehicle. So that way, at least you're always earning some interest on your account. Okay. And I can see that when I look down below, though, I've got the cash and sweep vehicle, that same number here. And yet they're saying that available dollars, I actually have $83,000 available to me. Whew, that's a far cry from just $7,000. Well, how is that possible? Well, you add my cash of $7,000 to the total combined amount of all these marginal securities here, okay, that buying power that creates buying power, basically available dollars of $83,000. So technically, if I really wanted to, I could today go out and buy up to $83,000 of additional marginal securities, even though I only have $7,000 of my name. Okay. Now, is that going to come cheap? Well, no, right? Especially now that interest rates are fairly high. The brokerage firm does charge you, an interest, overnight interest on that for however long that you are borrowing those securities. And I'm not sure what those rates are now. In fact, I should have looked beforehand, because I remember 2 years ago, maybe it was just even a year ago, that when I taught this, that margin rates were around 9% or so, I believe. And that was when interest rates were still fairly low. So now I can't imagine, maybe it's double that amount, right? I have to go and check. And it varies from firm to firm too. I understand Interactive Brokers probably has one of the cheaper margin rates out there. So a lot of people that trade on margin go there, but nevertheless, don't plan to be in that very long to have to be charging a lot of interest on there. Okay. So you can see that's what happens. Now, you'll notice that up above, I've got a few options positions here, some debit spreads. I've got, some long and short positions, but you'll notice for the most part, these securities don't provide any buying power effect. It's zero. Okay, so not every security is marginal. And then once again, too, you'll notice a big difference. If I come into my IRA account, as we all mentioned before, do we have margin capability in an IRA account? Well, of course, the answer is no. Look how the buying power effect for options and stocks is just flat out zero. So whatever cash I have in the account, this amount here, that is it. That's all I have available to trade, because I can't trade on margin. All right, so just some things to be aware of on that. All right, so why then should we have that? What if we're not ever planning on selling short? Why would I want to have margin in my account? Well, one thing it does allow is it allows you to access funds without liquidating your current assets. It also helps to avoid being flagged with insufficient funds and triggering a cash account trade violation, what we call a good faith violation. One example of that would be is that if I were to go out and, say I buy shares of stock on a Monday, and let's say it goes straight up, and I made money on that. Hooray! I could go ahead and sell it the next day on Tuesday. That's not even a day trade because I held it overnight, so I sell it the next day on Tuesday. Great, I've locked in a lot of profits. Let's say I've locked in $5,000 of profit here. Okay. Well, if on Wednesday I go out and I use these proceeds to buy, that's just fine. I can do that. But let's say on that same day the stock shoots up even higher, another stock, where now that value's gone up to 10,000. Well, if I sell that same day because it's already moved up, am I allowed to do that? Or is that going to create some problems here? Well, the reality is what's happening is what we call free riding. I'm actually using the house's money. And the reason why is that, remember, our stocks don't settle the same day, right? There's a settlement period. It used to be trade date plus 3 business days. Now it's T plus 2. In other words, whatever you buy in on Monday, those funds aren't taken out of your account until Wednesday, and vice versa. When you're selling on Tuesday, again, while those funds are there and available for you, they're technically not settled until Thursday. Well, so if I'd waited till Thursday to buy, I might be all right with that. But if I bought on Wednesday, really those funds are not mine yet. They're not available yet. I'm using the brokerage's money, right? Because it hasn't settled yet until the next day. So if I bought in, that's fine. But if I sold that same day, when it hasn't cleared, it's not really my money, and it's what they call free riding. You're using the brokerage's money, even though you made money on the trade. It's a no-no, and you get caught in what's called a good faith violation. Okay, and if they may give you one warning, and then after that, if you do it again, which believe it or not, some people get in the habit of doing that, right? Some do it maliciously, where they're thinking they're getting away with it using the brokerage's money. Well, you can't do that, and if you get stuck doing that, brokerage firms are not kind, and it's not just the brokerage. It's I believe it's an SEC rule, but they stick you in what they call 90-day restriction. Okay, so where now all you can basically do is sell. You can liquidate funds, and that's no fun, right? Being restricted in your accounts, and so you don't want to be stuck on those restrictions. Just make sure if you're using funds that they are settled. Well, that's in a cash account. If you have a margin account, then like I say, it helps to avoid being flagged with those insufficient funds. You may be borrowing those funds for a day is all. Probably wouldn't be that much of an interest there, but that's what happens if you're just owning a cash account. So to this day, even from one of my friends or beginning students ask, well, Rob, should I open up a cash or a margin account? I say, do the margin account, even if you never ever use it, just so in case you do get stuck in a situation like that, you're not being penalized for your ignorance, for not knowing any better, right? It's just good. The way I kind of look at it is it's almost like what do they call it? Like a draft protection account. I don't know if anybody ever writes checks anymore, but remember in the old days where if you wrote a check and you forgot how many checks you wrote and you might be overdrawn in your account, well, they'd have that, that protection for you, that overdraft protection, so you can avoid being charged fees and so forth in case that were to happen. I kind of view this as being somewhat similar to that. Okay. Let's see, Scott says the margin range of Schwab is between 12 and 13. Oh, interesting. I thought it might be higher. Of course, that was with TD Ameritrade at the time. So that's good to know. Edgar, what determines if they are marginable? Good question. I'm not sure. It's just the rules or priorities they set on that. I know things like pink sheet stocks or over the counter would not be marginable. Certain treasuries and that are not marginable. Obviously, most options are not marginable. So generally, it's just your equities. ETFs generally are marginable. I can't say for mutual funds. I don't think mutual funds are, but I could be wrong on that. I'd have to go back and look. I only own one mutual fund in my entire account, so I'd have to check to see if that's marginal or not. Of course, that's an IRA, so I wouldn't be able to help you out there either. But yeah, you'll just know if it shows that buying power effect by it. All right. So what are the risks of margin then? Well, as I mentioned, there's a greater potential risk of loss from increased leverage. Remember, you do have additional costs from the margin interest charges. You could get stuck in what's called a margin call, where they could liquidate your securities. So if things really did move down very rapidly and you were heavily leveraged, well, the brokerage firm is going to protect themselves first, right? And so the firm, they have that right that they could, if they had to, force the sale of securities or other assets in your accounts, and you may not even know about it, right? If things are really taking a nosedive and you're heavily leveraged, they're going to do what they can to protect themselves. So they may just go into your account and arbitrarily just sell off some securities to cover, so you have enough cash to cover into that account. Well, I just vow never to get stuck in that type of situation, right? Use it respectfully, wisely in that, and then you shouldn't have any issues there. But the firm, can also sell without even contacting you. Okay, and you're not entitled to any kind of time extension within a margin call. So if you do trade a margin, make sure that you review that brokerage firm's margin handbook and their disclosures, and just make sure you understand all the risks involved before ever trading on margin there. Okay. If you open your account without margins, can you go back to get a margin? Yes, you can. It's usually just filling out a form online. That's all you do is just say, hey, I'd like to have margin capability, and then they can code your account for that. All right, so how on earth do we short a stock? Well, first of all, again, have margin capabilities, but then let's definitely look for very much a downward trending stock. So if I have a stock that's been going like this, is that really a good candidate to sell short? Probably not. I mean, I get it that you're thinking that, well, this time period right here, I could make money when it's just falling down, but what's the number one rule we're breaking if we were to try to attempt to sell short right here? Hopefully we'll remember. What do we always say about the trend? Yeah, the trend is our friend, right? So don't fight against your friends there. And while we may be able to make a few bucks, most oftentimes what'll happen is that the trend just takes over and we're not quick enough to get out anyways. And so before you know it, it's already moving up higher and we're just losing on that. And so don't fight against that. Make sure we've got a stock that's showing some signs of trying to roll back over and being downward trending. Put the odds in our favor. Okay. So I like to take advantage of what we call these swings, where we fall from a high to a low. But I won't be in that trade very long. Even though my overall trend is downward, I don't want to be holding on while it's doing this. Because remember, stocks do fight back. They have that tendency to want to be bullish, right? They'll want to rise up higher eventually. And so even though it's longer term downward trending, just take advantage of the short term swings where we go from a high down to low. So we sell short here and then buy back here at the low. Okay. So look for those lower highs and lower lows. You can look for those stocks that are breaking through support. Is there any kind of bearish price pattern? Can someone name to me some of those bearish price patterns that we talked about in our prior class? Or we were looking at different, price patterns and candlestick patterns. What might be a bearish price pattern that could give us a reason to consider looking at a bearish trade? Yeah, very good. I think an easy one Bob points out is that double top. Head and shoulders is another great one. So you might have an uptrending stock like this, then it comes up and it kind of hits the same high. It's like, oh, right there. Immediately you're going, now, wait a minute. If we're upward trending, we should be hitting a higher high, but we didn't. So I don't sell short here. Don't do that. We got to wait for the actual pattern to play out, which the true signal is if we get a breakdown below that support. So if we get a break of support based on that price pattern, even though we had been upward trending before, that's a trend reversal pattern. So if I have that, you bet I could go out and sell short. And same could be applied towards, a head and shoulder pattern. Looks more like that, right? Where you get that lower high, but you get more or less the same neckline. Once again, the signal is the same. If we get that breakdown below support, then you can just measure that distance and say, oh yeah, that's my target. I'll sell short, make money for the short term. And then if it wants to upward trend after that, so be it. Okay. I kind of like looking for those downward channels where the stocks are already trading within kind of a rectangular channel like this, to where I could be taking advantage of those downward moves like that. So, but whatever you do, make sure you're choosing a stock that's very liquid. What we mean by that is that we've got a lot of shares traded, a lot of activity. You could probably get away with maybe 500,000 or more, but generally we'll look for 1 million shares, right? We want no, hindrances as far as buying back to close out that position. And if there's not much of a market, those prices can be, moving very dramatically in either direction. The other thing, though, with your brokerage firm, this may vary from broker to broker, but make sure that the shares are what we call easy to borrow. And you might oftentimes see that acronym ETB. Now, I have to admit, I didn't check to see if Schwab does that. I'd imagine they still do. Let's just come in and take a look here. If I were to come in and let's say we bring up a stock like Boeing that hasn't been too bullish lately. Yep, sure enough, you'll see up the very top here, right after the name of the company and the information. Let's just hide our options here. You'll see this little acronym, easy to borrow, ETB. So that tells me that, yeah, those shares are ready and available that I could go out and sell short this stock if I wanted to through the brokers. Okay. Now the flip side of that would be if, I don't know, let's see if we can think of one, maybe save here. Nope, that's easy to borrow. Let's see if I can think of a stock here. Nope, that's no good. Oh, maybe Fox? Nope. Marty says ARDX. Let's try that. Yeah, that could be. Well, except they're not even showing anything up here. But I'd imagine that may be hard to borrow if it's not showing there. Okay. So let me just try to think of a few symbols. I used to have a bunch of symbols that before. Usually they're like these really obscure stocks that you don't have much activity going on. I thought maybe Foxa for some reason, but no, still even that's easy to borrow. CEVA, some are saying that's easy to borrow. PDD, I think, is easy to borrow. Seat, what about that one? Interesting. Okay, so maybe with Schwab, if it's hard to borrow, maybe they just don't list it, right? They don't see the ETP there. So that could be it. I'll try to think of some other symbols while we're at it. But if you ever see an HDB, then it means hard to borrow. But tell you what, if we're not seeing that ETB, then I would just assume that, yeah, you know what, chances are we're not able to borrow those shares to sell short. So we wouldn't look at that for a candidate like that. Okay. All right, so avoid those hard to borrow. And like I said, treat it as a short-term trade. But number one thing is have a plan, right? Have an exit strategy. And so what we'll do is we'll just use the same bracket order that we would use for our swing trading that we talked about, I think last week or maybe the week before, where we discussed, you know, putting in that order to where it's pretty much automated for us, where normally we'd buy in and we'd have our upper target, a limit order up here to get out, okay? But we'd also have a protective stop order that if things fell down instead, then we'd exit out of that position. Well, now everything's just backwards. What we'll do is we'd put in a buy stop order up here, okay, because we sold short, and then we'd have our limit down below here because we want the stock to fall lower to hit our limit so we can buy it back to close out, buy it back at a lower price and make our profit. But if things really start to move up, let's get out of it. And the reason why, the biggest danger of all, is what's our potential risk on that trade? How high can that stock go? Yeah, there's maybe no stopping it, right? It's unlimited. And that's the danger behind this strategy, is that if things really gapped up higher and just went on a run, you know, boy, we're going to just be losing money left and right. Okay, so we understand that our reward is limited. The stock can only go down so much, it can only go down to zero. But our risk, oh my goodness, it's unlimited. So that's a big turnoff for most people. I would agree with that, right? So that's why you definitely want to make sure that you have an exit strategy. Have that programmed in already, so there's no ifs, ands, or buts, and you just have something to try to protect yourself to get out. Okay. Now, because we also know that stocks can just take right off, not a good idea to maybe sell short when you have other events like earnings, especially, right? You know, you could probably make money if things really gap down, but again, it could gap up higher too. That's too much of a gamble there. But also avoid things like dividends, stock splits, and so forth. All those true stocks are adjusted down by the amount of the dividend. Just these events just create kind of problems, right? You might have to be owed for the dividend, and you just don't want to be stuck with that. And stock splits too, just crazy reactions. So just kind of look at the graph and make sure there's no event in the middle of the way to help, you know, that would cause any issues with us here. Okay. So Steve asked, so wouldn't you look for high volume stocks which just missed the earnings? You could, but be mindful too. Sometimes you get that knee-jerk reaction where you'll have earnings and the stock just gaps down lower, and then before you know it, the next day it's already trying to fight back up again. Okay, but if you gave it a day or two to see if it, tried to move up and it's still falling down again, could very much be a candidate for a short position. But I would not take a stock that gapped up after earnings, assuming that it's just going to roll back over again. Nope, especially if there's a lot of buying volume that caused that to gap higher, right? Because again, we're just fighting against it and just gambling and assuming that it's going to roll over when there's no reason it should, right? It should maybe want to take off even higher. But tell you what, let's maybe try to look at some examples here. So if you have what you believe to be a good downtrending stock, be sure to chat it in. Because I have to admit, I was a little bit hard pressed to find a whole lot out there. Now what we could do if we wanted some ideas is we could go into places like FinViz and run a scan and try to see if we could get some ideas that way. I'm sure many of you have seen us use this before, but it's a wonderful site that provides a screener that's free. Just make sure you give them your email address so that way a bunch of advertising doesn't pop up. But just on this same page here, I can look down below and they have this channel down right here without any other criteria. But I could click on that channel down. That'll take me to the screener. And you got to admit, these are pretty good looking downward trending stocks, that could be potential candidates. Okay. But again, I don't know if they're low priced. Like I'm not going to go out and short a $2 stock here, So, and they may be very liquid too. So I would certainly add in my own filters here. Okay. To where we could say, yeah, let's first of all, let's make sure that we've got maybe a market cap that's at least small or better. So plus small on that, because that'll weed out a lot of the micro cap or the penny stocks and so forth. Okay. I usually like to look in the US here, but nothing wrong with foreign. Let's find our volume, average volume. Where'd that go? There's average volume over here on the right. So average volume, let's say over 1 million. Okay, wow, we've only got one. Is that really it? So that's all the stock, that's all that the screener found when we're looking for channel down specifically. Okay, is this GPRE? That's because I guess, of course, this is average volume, so it's not today's volume. So that's kind of interesting that they weeded out all that. Now, if I lowered that down to 500, let's see what happens. Now I've got a whopping 2, and that was only an $8 stock. Very interesting. I'm curious about GPRE. I'm willing to bring it up to see what that looks like. GPRE. Yeah, it's been clearly a downward trending stock. Still rolling over. Could be trading near some support though. Not a lot of room to the downside there, but my goodness. So what would happen then is that, okay, that cleared that channel down, hurt us a bit. So I may take that off. Okay. Now I've got 138, but then put in our own criteria. I'll change that back to over 1 million. And let's put in our price at least over 20. Right? In fact, it might go over higher than that. Let's just go over like 30. And then what we could do is we could say, hey, let's look at from a performance perspective. In fact, I would combine that with maybe moving averages. Let's face it, if the stock is downward moving, is it going to be above or below our 20-day moving average? It'll most likely be below it, right? So I'll say the price is below the 20-day moving average. Now, it could still be upward trending and below a 50-day moving average. It's just maybe started to rally up from a bottom. So I generally leave the 50 and 200-day just like that. I'll know immediately if it can still be upward trending and below the 20-day too, by the way. But we at least know that it's showing some signs of weakness if it's starting to go down below the 20-day moving average. But what I could do is I could take the performance and say, hey, we know the market's been very bullish since, well, November, okay? But I could see if these stocks been down this last week, because this week's not been too bad. I could even go maybe down for the month. And heck, I could even go down for the quarter. In fact, I'm curious if I did go down for the quarter, that's really fighting against the overall market trends. So something must be up or down with these stocks, right? If they're doing that. So let's try that out for a moment. Click on quarter down. We've got 5 pages now. Sad to say Apple's been down for the quarter, but it hasn't been taking advantage of this rally at all. I mean, it did at the beginning of November, but since then it's been going the wrong way. Unfortunately, it's down again today. Believe it or not, that could be a candidate, although I hate to fight against Apple. Well, let's just kind of scan through and see if there are any here that might really stand out. BXP could be ready to roll over. I see something like EA, that's clearly near a support level, but I don't want to buy it or sell short if it's just going to bounce off that support. If it were to break down below, then that could be a candidate. Okay. DT certainly been falling down lower, might be something to look at. Just kind of scan to try to get some ideas. Etsy, maybe? That's down today. Let's take a quick look at that, see what that might look like. Okay, interesting. We've got a candidate because it's clearly been bearish, trading below our 200-day as well as the 50 and the 20-day. We have, lower highs. Notice how it has a hard time breaking out above that 200-day moving average. In fact, is there a potential price pattern forming on this stock? I don't know if we really talked about this one in our class, but what do you observe? In fact, if I hide our moving averages, yeah, Tom's got it. Maybe a bit of a descending triangle, right? Because can everyone see it? We've got these lower highs, yet admittedly we are hitting that same low, and that used to be a bit of resistance back here. So that's the support level. So I could put that in a watch list. It is down today when the markets are up pretty nicely. Okay. But if really the true entry on this would be if it can get a breakdown below, that horizontal level there. And if it did, wow, I mean, the potential here would be from what, about 68 to 85. So easily, about an $18 move, $17 move, maybe. Puts down this neighborhood down here somewhere, but not quite ready yet. Now I could sell short at $70 here today, but my target would be only like maybe $2 of gain. So the reward to risk probably isn't that great on this just yet. Okay. Let me see what some of you have chatted in here, though. I know Tesla's really been struggling. We've got a bearish trade on that already with some put options here, but you're right, that could be starting to break down below, although some might argue that we're still just kind of sitting right at that support level. But if it's trying to break through it, then that could still have more room to fall down lower. I always get a little leery about Tesla because it's pretty volatile, right? All it takes is one tweet or something to come out from Elon Musk to have this either take a nosedive or bounce right back up very quickly. So you got to be kind of careful with some of those very volatile stocks because it can be a double-edged sword. Mark says COHR. Yeah, it's falling down lately, but again, that trend looks pretty good to me, right? If I bring back some moving averages, instead of taking a bearish position, some might be looking for new entry on a bullish position because that's just getting a nice bull flag to where it's pulled back before and then bounced and rallied up. So nope, wouldn't look at that yet until it were to maybe break down below some of these or get a lower high, that type of thing. Lynn says Starbucks. Now that might be good. I remember Starbucks was falling lately. Let's take a look. Oh, okay. Let's maybe entertain this for a moment here. Been all over it, kind of up and down, up and down. It is trading below our long-term moving average. It is below the other intermediate and short-term moving averages. What it kind of strikes me about this is that, if I hide the moving averages for a minute, notice that we tried to move up. We hit our head on the ceiling of resistance, and then we came down and found support right here, right? And then we got a lower high. Then we broke through that. We tried to bounce up, but what happened? What did this support level right now appear to be, is appearing to be now? If I extend that out, just perhaps this bit of support here could be functioning as a bit of new resistance. Now, admittedly, this is, support here too, but if that's getting a lower high, then maybe the reality is it should want to break down and hit a lower low. Okay, so what could be my lower low? Maybe all the way down to 88. So again, not a huge move, about a $3 move, because I would look at that as my target here. If we start to break out above maybe 93, I'd be losing maybe about $1.50 to make about $3. I mean, that could be, just for the sake of time, I might just look at this anyways, unless we could find a much better example here. But I could probably entertain that. And I'd say, yeah, those are lower lows. Yeah, in the 90s, right? This is a little higher low right here, though. So let's discuss this. What I like about it is that it's not like it's already dropped down lower. like back here, sometimes we get that stuck in that dilemma where it's already fallen down so much and you're like, well, now what do I do? Here we're entering in because we're assuming that it's just poised and ready to roll over. But what I like about it is that we'll know very quickly if it is going to roll over or not. Because look at these shadows on these candles. Look how for the last 3 days, it's tried to move up above this level. See all those little candlestick wicks? And it still failed to close above it. And now today it's down. Okay, so if it decided that it is going to be bullish and break out above it, well, that might be enough for me to say, nope, I've got to get out. It's not being that bearish. That's how demanding we could be on this short strategy. Okay, so if I put a line right there, let's see where that's at. Yeah, sure enough, it's right around 93. Our high here was at 92.96. Okay, and the high today was at 92.87. So 93, I might give a little bit of breathing room, so like 93.20 perhaps. Okay, that's a $2 area from where we're at right now. If we were to go from 91.20 up to 93.20, we'd say, nope, that's not being that bearish. And by then, quite frankly, it'd also be breaking through, a bit of this downward diagonal line like that. Okay, so that'd be enough for me to get out. Okay, so that would be what we call our buy stop order. We're used to putting in a sell stop order. Now we're going to have a protective buy stop order that if things break out above, we buy it back to cover and minimize our loss. So it'd be a loss about $2. Well, if our target is down here around 88, just looking at this prior support level, and I could be shortchanging myself there too, because if this is kind of a triangular pattern, if that were to be from 98 down to 92, that's about a $6 area there. 92 minus 6 would be 86. So I could be shortchanging my target there. But if we were to fall down to 88, what is that? That's like a $3.25 move. So not quite a 2-for-1, I have to admit, on something like that. But then again, if it were to fall down to 86, then that would certainly meet that. I'll tell you what, let's put that in for our target. If we can see something better, we'll do that too. I'll just draw a line there to make sure that we understand that's where our exit would be. Yeah, wow, if we broke through there, could fall down to 80. But I suspect that people might be looking to buy in, seeing that low from back there. If they don't, then we'll just quickly get out. Now, I don't see any earnings around the corner. We've already had that back here in January. So we could be in that at least through March and April. Don't see any dividends or anything like that on this chart either. So that's good. Let's make sure that's marginal. I'm sure it is. Plenty of volume on the stock, 7 million shares. And I do see the easy to borrow, ETB. All right. So I position size for that loss, that if my goal is to get out at 93, and change, here, let's say if I were allocating $5,000 towards that, I would take my 5,000 divided by the price that I'm buying it back at, which theoretically should be around the $93 area. So I could do technically around 50 shares. Okay. So here's how we'll structure that trade. How we'll create the mechanics of it is that I would go up to my bid price, because remember, we're selling short, and I would sell custom with OCO bracket. See, everything's backwards. Normally we're doing a buy custom with OCO. Now we're going to do a sell custom with OCO bracket. Okay, so if I do sell, down below, it creates that template for us where we're selling first in red, and then we have our two buying back orders below in green. Okay, so I could sell, let's say 50 shares. I'll just put it at our limit right here. This is what we're selling at. Then we have our limit, which is our target. Remember, your limit order is good for your price or lower, meaning that we're willing to pay X amount to buy it back at a lower price. So I sold first at a higher price. I want it now to fall down to a lower price, maybe at 88. And so if it trades at anywhere at 88 or better, which is 88 or lower, then it'll buy back those shares to cover the position. And I want that to be good till canceled. Okay, so that's the good news. If it falls down, we make money on that. But if it starts to break out higher, I could change the quantity here, that if it goes up higher, then we have a protective buy stop order. And I think I gave a little bit of room around 93.20. Okay, so if it moves up and goes above these highs right here and above our diagonal line, here's $93, and it could happen today. So you can see we're being very demanding on this, and rightly so, because I would hate to have it just suddenly pop up here to 98 and take a bigger loss on that. Okay, so if it did move up $2, what have I lost? $100? Because I've got 50 shares. And I could maybe sleep better at night knowing that. Now, here's the catch. Am I guaranteed to get out of this stock if it moves up at 93.20? I mean, you're saying no, why not? I mean, it's a stop order. Am I not going to get out at 93.20? Well, remember, your stop order is just a trigger. It becomes a market order. That's why it says MKT there. And so this doesn't protect us from gaps, right? If some firm came out and said, hey, we're going to buy Starbucks or whatever, you know, thinking the worst case scenario here, and suddenly the next morning it gaps up to $200 a share, that is a potential danger, right? It's very real. So that's again why you want to be mindful of any news, or if there's any speculation or any rumors out there, then I'd probably not sell short if I heard a rumor that maybe some company's eyeing to buy them out or something like that. You know, we might scour the news to see if there's something like that. But and be careful about choosing those stocks that do a lot of these gaps. You know, like for example, if I were to look at FTNT, you know, of course, this gap to the downside quite a bit. So that might actually benefit us, but it works both ways, right? It's gapped lower, but there are areas here where it gapped up higher. Probably not a great candidate for selling short because you just don't know, right? When you see all those gaps, it's like, yeah, I think I'm just asking for trouble on something like that. Whereas on Starbucks, yeah, it's had a gap here. That was with earnings though. And actually it's pretty volatile too. It goes up and down a lot, doesn't it? We're just after that short-term move. But that's something I'm just aware of, is that, yeah, there is that potential danger. There's always that maybe slim possibility, but it is a possibility that I should just be aware of. Okay, so be careful about the securities that we're choosing for that. All right, so I've got my stop GTC. Like someone earlier mentioned that maybe we could do a partial where we just buy back 25 shares if it's our initial target of 88. And then you're correct, we could put in another new order to sell, or should say buy back if it were to fall down even lower, let's say down to like 86 or 85 or somewhere. So you could experiment with that. I have no problem with that. All right, let's put this in to show you how this would look. Let's see. Now I should be able to sell short because I'm willing to sell it at 91.37. We're now all the way up to 91.42. Maybe it's trying to move up on us now, but nevertheless, we'll see if we can get this to work for us here. Okay, so I'm in my margin account. We're borrowing the shares. I'll just put some notes here. We had a downtrend, lower resistance, I should say lower support as new resistance. We'll exit if breaks above 93. Oh my goodness. You know, target would be down to about 88 to 86 maybe. All right. And you'll see it says in negative our buying power effect. Okay, so it's a negative number. So it's eating up some of our buying power. So it's using our buying power to be able to go ahead and sell short those shares. So let's send that off. Should go through pretty quickly. Yeah, because we're willing to sell that for lower price. And I guess it is moving up on us here. So we sold, that's good for us because now our risk to reward's a little better. So we sold at 91.50 here, 54. Okay, and now we've got these green bracket orders. Gosh, it seems awfully tight to me, but I guess that's okay. Yep, so it's still above these lines here. So there's that kind of faint to see, but you can see that green line right there is where we would get out. And then we've got our target down below. And then we just let it sit there. Now, if after a while we just go sideways, chances are I'm just going to close it out anyways. That's how demanding I'd be on these short positions. With that wick at the bottom, though, it almost appears to me like this guy's trying to fight back today for some reason. But I'm okay with it. I think it's still just this fact that it used this support as a resistance, and for the last 3 days straight, it's not been able to break out above that, I think it's got potential. The only hindrance would be, I think, this support area right here. Okay. Like I said, it's a little bit more challenging when you have, markets that are trying to be bullish on us here. Now, I wanted to bring up Tesla because that has been bearish, and you notice that the stock really gapped down lower after earnings, then it tried to fight back up. But why would we take maybe a bearish position right here? We see some clues on that. Well, it's interesting. It filled that gap. If I look backwards, can you observe that, there's a little bit of old support back here. Right now it wasn't perfect, but see if that was old support that gapped below it. We tried to break out above and we filled the gap, but then what happened? We used more or less that old resistance, or excuse me, that old support as a new resistance and began to roll over. So granted, yeah, that would have been a great day to sell short as one strategy. But admittedly, this is not exactly a cheap stock, right? We're talking about, $200 a share here, and it's pretty volatile too. And so, as we mentioned before, one of the drawbacks of a selling strategy, selling short, is that my risk is unlimited. And boy, this thing could really just pop up to 260 if it wanted to. Right? It's a very volatile security. So, what are some other alternatives to selling short? Maybe we should discuss here for a minute. What are other ways to be bearish and make money to the downside? Very good. Yes, I know we've got some options traders here, but some are saying this is where you might hear about what they call put options. Again, if you don't trade options, that's okay. It's just for now, be aware that you do have other alternatives. So again, the fact that it's kind of expensive and it's fairly volatile, that to me, the risk didn't justify selling short because it's just such an unknown. Even if you don't know anything about options, the one thing you should know is that when you buy a put option, your risk is known. You have what's called defined risk. You know automatically what total amount of loss you'll have on that trade that can't be any higher than that. You have a maximum amount of risk for whatever you paid for that option. Well, on this date, on what was that, March 4th, when I saw that breaking down at that old resistance, yeah, why not take a bearish trade? And so it was in this account that I think I only bought one measly put option. Okay. Now that was expensive. It cost me $2,400 just for that one put, but believe it or not, that was my maximum loss. I could not lose any more than whatever I paid for that option. And I don't have to lose that amount either. I would have an exit strategy that if things went the other direction, I get out. So maybe I only lose $5, $500. You can have an exit plan and should for your options. But I wanted to show you is that since getting into that trade and because the stock has fallen down lower, I bought in on the 4th, the value of that put's gone from 24 up to 38. So if I were to sell that today, I'd have a nice 58%, well, 58.5% gain, or a profit of $1,400 on that trade. Okay. And so that's an alternative. To say selling short is to look at put options and make money while things are falling down lower. All right, well, that works well for individual stocks. What about for markets? If I see that maybe I don't know, let's bring up the spiders here. It's starting to roll over a little bit. If you're concerned that maybe these markets are way overdone, I mean, this is the prior all-time high, this blue line that I've drawn here from back in 2021. We're way above it, or maybe well above some moving averages too. My goodness, look how far above the 50-day and the 200-day that we are right now. That if you wanted to try to hedge your account, meaning that, hey, I've got all these bullish positions, and I do. I mean, my account is very much bullish. Look at all these positive numbers here. That's good when the market moves up, but if it goes down, then they all get hit hard. So is it possible to provide a little bit of a hedge in your account that if things were to roll over just for the markets in general? And the answer, of course, would be yes. This is where what we call inverse ETFs or short ETFs can be a possibility. For example, the SPY tracks the S&P 500. It's an ETF that makes money as the S&P 500 index rises up higher. But if things are going to be bearish, then I can intentionally choose an inverse ETF that does the exact opposite, where it's actually shorting the SPY. In fact, the symbol for that is SH for short. So notice as this has been moving up higher, a bearish security would be going the other direction here. So if I bring up SH, which shorts the S&P, and you'll see it says there, ProShares short S&P as ETF. If I hit enter for that, it's the inverse, right? Notice how it's been going down, down, down. All right, well, back in the fall, remember how the markets were falling down. If I come back to our SPY again, here's the fall of last year. We've got August and September and October. Typically, October's not, well, September and October are typically not very good months for the market, right? They're usually poorly performing. So the markets were falling down lower. Our SPY was going down. Well, while that's happening, to make money, you could be buying into the SH because it takes a bearish position on the SPY. And so it would be rising up higher because the markets were falling down lower. So remember how earlier we talked about how I can't sell short in an IRA? Well, what do I do now? Well, you can buy puts. If you have an IRA, if you have options approval, you can go out and buy puts. But you could also trade these types of securities too. So it's kind of a loophole, maybe a workaround to where, yeah, if I think things are being bearish for the short term, I could go long the SH and have that move up. But mind you, it is shorter term because eventually the markets will move up again. And when it does, then these guys go down. Okay. And so there's a whole slew of these inverse ETFs out there that tend to be more for the shorter term for, for hedging opportunities like that. All right. Gary points out too, like if you like the diamonds, it tracks the Dow that's been moving up higher here. If things were to pull back like we did just for a few days back here at the beginning of the year, I think you could trade what's called the DOG, the DOG. Okay, notice how that popped up for just 2 or 3 days. But of course, it's falling down now because the markets are being bullish. But if the markets are kind of top heavy and ready to roll over, or if you just wanted to provide a little bit of a protection, then yeah, you could go long a few shares. Don't go too many though, because you don't want to fight against the bullishness of your account. But if things were to roll down over, then these guys would pop up pretty quickly. And that's the interesting thing how markets work, right? Markets generally kind of gradually rise up and then they quickly fall down lower. Well, if that happens, then these guys quickly rise up higher because they're taking on the bearish position. They're shorting the Dow 30. Okay. All right, I forgot some of the others. What's the Qs? Is it PSQ? I think it's PSQ, yeah. So if you're bearish on the NASDAQ right now, you can go long the PSQ. But again, treat them short term. All right, well, probably better wrap this up. I wish we had better examples. Let's try to see if there's anything else. Well, it's a lower price stock. It's funny, I've got my bearish candidates here, and most of them are green. And that's what happens when the markets are being bullish. Well, everything just wants to go in that direction. Let me just take a look. There's Pure Storage. That's starting to fall down. But again, that trend has been up. So it could come down to this level here. I'm just curious if any of these, that could have some potential here because that's been kind of sideways. So maybe it's ready to roll back over. Nope, see, that's more bullish to me than bearish. Target could fill that gap maybe, but that's still contra. That's a counter trend that we'd be taking on that. Counter trend there. Could be ready to break down below support, kind of lower price stock though. I mean, AI has really been struggling here, which is kind of unusual. You thought the AI stocks would really be moving up, but even Nvidia is starting to pull back a little bit here. Okay, so yeah, it's tough when the markets are being bullish. It's a good problem to have that everything wants to be bullish, even the bearish stocks originally that were bearish. But these guys all look pretty bullish to me. That one broke down, could have some potential. So in your journey, if you stumble across stocks that are being bearish and they kind of stand out, then that's what you do is you throw them into, a bearish watch list. And these are just stocks that from last year and other times that I just threw in that now have clearly changed direction over that same time period. What about Disney? I know they moved up, but no, they're still doing their thing. All right, but do the best you can. Like I say, you can go into and create these scans or run through these screeners to see if there are other opportunities that might show potential moves here that we could trade. KNX almost looks like a head and shoulders to me that could be ready to roll over. KHC Craft maybe. Let's try that one. Okay, that could be. Okay, we're sitting right at a moving average. So, it's a good idea to bring up things like moving averages because other people use those too. So if they see what we see, that it could be sitting right there ready to bounce, then I'd be patient and wait for it to, break down below. And then I think we'd have a pretty good setup because that's been downward trending like that. Boeing certainly could be because of all the issues that they've had. I'm glad we remained out of that trade. But even Boeing is nearing, some prior lows back here. All it takes is just, a headline that comes out and says, "Hey, okay, they found the issue. It was some guy sloughing off in his quality control job that clearly wasn't doing his job." But so much uncertainty out there, I don't mind taking a bearish position on that. But it just takes, maybe Airbus comes out and says, "Hey, we're going to buy you out" or something. Who knows, right? That be careful, but observe where you found prior lows. And so if that's 176, I guess we have another $6-7 move that could potentially fall down to. Clearly a lot of selling volume, but then be pretty quick to exit out if it started to bounce back up. It's a shame. They're a great company. They just are not. Now what are they going to go on strike because they want a pay raise or something? I'm like, that's not the right time to be asking for a pay raise, folks. When you're not doing your job right, and people's lives are in danger because of you, and you want a pay raise, give me a break. Holy cow! I just wanted to throw some fists when I heard about that. Just outrageous. Okay, Apple. Yeah, I hate to fight against Apple, but I agree it's been bearish quite a bit here, and so that could have some warrant here because it is breaking down below. We tried to move up for a few days. Now we're getting a lower high. It is a bearish candle. Has this been support in the past? Well, I guess if I look back here, it did bounce off that twice around 166. So I could have about a $5 move, maybe. Could be potential there. Hate to say it, but yeah. All right. Well, it's definitely a strategy to test out and try out. And so that'll be your next steps then. It's kind of fun when you learn how to trade to the other direction and make money. That you're ready to go, that if things go in the other direction, then we can say, okay, I'll pivot. I'll now do bearish trades and make money in that direction. So your first step would be try to create a watch list of those bearish stocks. If they come across a loser that's breaking down or a price pattern. Oh, and by the way, I failed to mention that too. Bear with me, but if I were to come back here, and let's just maybe delete that for a moment. And let's see if there are any stocks that have, some bearish price patterns. So I can come over to our pattern here, and let's see if we have maybe like a double top, if there are any out there. Let's try double top. And again, the computer's not perfect. Sometimes it sees things that aren't really there, quite frankly, but got one page. Yeah, so I wouldn't qualify that. Look how wide apart that is. But that's a good support. If we break down below, we could. Or Whirlpool that was just recently taken off the S&P 500. That could be a potential candidate. We got support down here. Kind of struggling. Got time until the next earnings. You know what? If that were to break down below 105, might have about a 10-point move. And clearly, that's been very bearish. Okay. Oh, did I pick double bottom? Oh, I did. My bad. I'm sorry. Pick double top. I wondered why that was popping up like that. No double tops. Things have been just too bullish. What about head and shoulders? Any head and shoulders? Is it because of my price below 20-day? Let's take that off and see if anything comes up. Still nothing. Yep, things are just so bullish lately. It's tough to get. Here we go. Oh, ANET. Okay, that could be. Uber, maybe. Very strong trends. Let's take a look at ANET and Uber. All right, I can see that double top. We had a debit spread on this that played out okay. Look how we hit that high and then earnings, and we hit it again. So I could put it on a watch list and cheer for it that if it were to fall down and break down below that, that's a pretty decent move. About 20 some odd point move. But clearly the trend is still up right now, right? And Uber. Okay, I think the computer's being a little bit lenient, but I could see it. There's a top, there's a top. Same story. So we've got a setup, but clearly the trend has still been very bullish. So we want to make sure it really is reversing by getting a breakdown below that. All right. Well, when things do roll over or they are top heavy or beginning to go the other direction, then these scans will produce certainly more candidates that we can look at to be ready to trade on there. All right, just some ideas I forgot maybe to mention there to help us out. So try to find those. Consider getting a margin account if you don't have one already, just so you can have that capability. But be aware of all the risks that are involved with that. Just don't go out and short like crazy or borrow on crazy. To keep myself safe, I always look at, do I currently have a positive amount in my cash and sweep vehicle? And if I do, then I know that that's my money. If I'm borrowing on margin, then that'll be either negative or in parentheses, I think. And then I'll know that, oh, I've got some margin going on there. Okay. And then make sure you observe those short-term bearish moves. Just trade for the very short term. As far as where to find those inverse ETFs, you probably Google it. I don't know of a list anywhere, but I'm sure there's Google probably got a list out there somewhere. Just type in short ETFs or inverse ETFs. And finally, just practice. This is a strategy that you need to just practice in. What I like about it is that just like our swing trade, it's a bracket order, right? That we have that more or less automated for us. So if Starbucks does pop up higher today, or hopefully will continue to fall down lower, it's kind of funny that we cheer for a stock to fall down, but either way, we've got our orders to get out on either side. And that's what's kind of nice, is that it's defined what our risk is and our exits are even before we're even in the trade. Okay. All right, then last question, how do you get notified if trade is on margin? Well, you'll know it because when you put in your trade and you confirm and send, you'll be able to see that the buying power is in negative. So now you're using up all of your cash. But like I say, the easiest way is just to be able to see, well, when I'm spending, it'll show when I do a confirm and send, am I spending more than 12,000 bucks there? Then yeah, then I'll know that I'm borrowing on that, which again isn't a big deal if you do that on occasion. Just manage it, with respect. Let's put it that way. All right. Well, I hope this helped answer your questions about, what do I do when I hear that we are selling short? I've had some students ask about that recently. Well, what does that mean? This explained today exactly. It might take some time to go through that again and review it, but try it out. At least in paper. That way you'll be prepared and you'll understand the mechanics of how that works out. And I think you might enjoy it. It's kind of fun when things fall down fast. You can make money very quickly to the downside, but be aware of the risks involved. And then if you'd like, learn about those other things like the inverse ETFs. Also, at some point in your career, learn about options trading. If nothing else, at least we can make money to the downside, right? All right, if you need help on the orders, make sure you reach out to Thinkorswim through Schwab. They're the broker, we are not. We can't help you out with that, but they can. If you have other questions on this, we'll have a Q&A later today. I think Greg is teaching that because Gary's out. And he's familiar with this, so he'll understand how to sell short and answer questions there as well. But next week, I think we'll be kind of wrapping things up. We'll be talking about behavioral side of investing. And then I think our last session, we'll just leave it open to answer your questions and maybe review other trades and kind of go through routines and things like that as well. All right. Well, I want to thank everyone for being here. I hope this is helpful for you. Cheer for the markets to continue to try to be bullish. I hope they do. I really don't want to sell short right now. I want to be going long, but that time could be coming. We've been pretty bullish for a long time, so maybe we're overdue for a bit of a pullback, and so at least we'll know what to do if that situation arises. So until we meet again, everyone, have a great rest of your afternoon, and I'll talk to you again soon. Take care, everybody. Have a great week.